What's up, guys? Welcome back to DCA. So what we're going to do in this video is take a look at Solana. So Solana, in my opinion, is one of the premier layer one networks. I think it's going to be one of those networks that has a chance to continue to compete with Ethereum for market share going forward. So whether the bull run continues in 2022 or whether it takes a few years based on current macro conditions, regardless of when that next bull market comes around, I think you're going to continue to see Solana capturing market share from Ethereum going forward. I think the network is too fast and has too many things going for it that I think it's going to be difficult for Ethereum and a lot of the struggles it's been having to continue to capture market share as more and more people come into the market, into the crypto market. Because of the fact that, if you think about it, the way that Ethereum works right now, and obviously they have plans to sort of implement things that should alleviate some of these issues. But the way it works now, if you truly want mass adoption of the cryptocurrency asset class, if you want crypto to gain widespread public adoption, you can't have the network that has everything built on it having ridiculous costs associated with performing every transaction. Because as it stands, crypto is essentially priced the way that Ethereum works. It's priced for the rich and it's priced for crypto enthusiasts. No one else is going to use it. The bottom line is the average person is not going to come into this space, especially if they're not a hardcore crypto person, and go onto the Ethereum network and pay a ridiculous gas fee. So ultimately, a network that's going to be fast is going to be important, and a network that is going to be cost effective is going to be important. And Solana captures both of those factors. So today what we're going to do, we're not going to do a deep fundamental analysis today, although I'm doing a deep dive into Solana and I'm going to do a market analysis for predicting where Solana may be in the future in an upcoming video. Today, we're going to do a price analysis. We're going to take a look at where we're at right now with all of those factors in mind that we just discussed. We're going to show where the price is at right now and where it may be going forward. So if you guys are new here, my background is an undergraduate degree in economics and a doctorate in medicine. That's just to say that I've been developing my research skills for over a decade now, and I'm now applying those skills into the cryptocurrency asset class via a data-driven, objective approach to all of our analysis, because we simply don't want to look at the upside. It's easy to always look at only the upside. We want to look at the data from an objective angle. That way we consider both the down and the upside potential for every investment we make. Now, we do take an approach of a long-term investor on this channel. So we're not talking about looking at short-term analysis of anything. We're not doing day trading here. We're looking to capture huge percentages over time rather than small percentages in a short time frame. So with that said, if you guys like this type of content, hit like and subscribe, and let's get into it. So the first thing we're going to do is just sort of zoom out here. We're looking at the Solana USD chart on a weekly time frame. And I just want to show this quickly because I think this is important to consider. We've basically had, so far, you can think of Solana as having three different epochs. So we've had the 2020 timeframe, we've had the 2021 timeframe, and now we're in the 2022 epoch. So in each of these, we've had a large move to the upside, which is what we did back here in 2020. So in August, I mean, we went from around 50 cents or so all the way up to $5. So basically a 10x. But from there, what did we do? And this is important. We had a huge retraction as the market was winding up to head into a bull market. So we had this massive retraction, okay? We came down around 80%. But from there, once the bull market got kicked off, once people started seeing the prices associated with paying fees on the Ethereum network, people start looking elsewhere. And what do they want? They want a fast network and they want a cheap network, Solana. So Solana just goes on a massive run from here. So, about $1 all the way up to where we hit $51 at the end of April and then heading into May. Now in May, we had obviously another big correction, but everything had a big correction then. So that was, just par for the course essentially. So everything has a huge correction. Solana goes down with it. In fact, going down as much as 60%. But then importantly, and now you haven't seen this with every single asset, but Solana has made a new high followed by a big retraction, which is healthy. That's healthy for the market. It shakes out these investors who are taking profits. Then it goes on its next run, and then another shakeout, and then it goes on its next run. And now notice where we're sitting at. So as we went up to around $240, okay, so hitting nearly an $80 billion market cap. Then now we've come back down and we're sitting down at a market cap of around $36 billion. And this is perfect because now we're sitting right in this consolidation zone yet again. And we're just in well-charted territory at this point because we've seen Solana do this multiple times. And, you can look at many other assets that have not had this pattern. They've not been able to get back to their prior all-time high, or at least go well above it in convincing fashion and then start to form a new consolidation level. But we're seeing that with Solana. Now, that doesn't mean there's no potential for downside from here. It simply means that we are in this expected range, okay? So the next thing I want to do is talk to you about the DCA index risk model. Okay, so what we're looking at here is the DCA index risk model. If you're new to this channel, what this is a machine learning algorithm model which helps us to identify risk in the market. What does that mean? What is risk in the market? Risk in the market indicates when an asset is simply significantly overbought or significantly oversold. So this helps us to identify when, for instance, the market has just run up too far, too quickly, and is likely in need of a pullback. So you can see we don't have a lot of price history for Solana. So just to look at an example for Bitcoin, you can see dating all the way back to 2012, 2014, and then, all the way through where we're sitting at right now. This shows you that this model is adept at finding where the market has likely hit a macro level peak. So it identified this macro level peak back here in 2013 to this double peak cycle, and then here in late 2017, and then again at this peak here in early 2021. Okay, so at the same time though, it can help you identify where a very likely location for a market cycle bottom is. Okay, so we saw that in 2015 at the worst portions of the bear market here in 2018. And then you can see that again here in January, it was telling us that, this market is significantly sold off. It's sold off faster than would be expected. And therefore, the model was telling us that this is very likely a low risk level. Or in other words, an excellent time to be accumulating the asset. And, you sort of saw that with the COVID capitulation event as well. So we were sitting up here at around $10,000 and just went crashing down to 3,800. And, in fact, we closed right here at around 4,800. So this was telling us, that's too much. We've corrected too much. It is a very good time to be accumulating. And so we're down in these lower risk levels at those points. And that's kind of where we're sitting at now for the overall market. Now, notice that doesn't necessarily mean that you're at the bottom of the market, because back here in 2018, we were in this 20 to 30 risk level all through basically the second half of 2018. And the market still corrected. But what it does is for the long-term investor, it tells you from the long-term investor perspective, this is a good place to be buying if you're not someone who needs to be turning a profit within the next month. Because quite frankly, I think those models are significantly less accurate. Whereas a model like this, I feel like carries heavy weight behind it in terms of its ability to identify when an asset with long-term growth potential has been way oversold. So you'll notice that Solana has been in the highest risk level at 3 different points. Okay, so once here, February, and then here in April, and then a last time here in September. So what this was telling us, first of all, this first peak where we hit into this highest risk level, they're simply, we still kept going up from there. Now there was a correction because we ended up, going down around 30% from there. So to a degree, the model was correct, but there simply wasn't enough data at this point for the model to make any sort of strong assumptions. So it was sort of guessing that, maybe we're oversold right here, but quite frankly, it wasn't 100% sure because there simply wasn't enough data. Solana had only been trading for a short amount of time at that point. But from that point, the model learns from its prior mistakes and then applies them to its future predictions. Okay. So when the model was telling us here at $47, Solana is way overbought at this point. All right. So right around here. Now from there in April, what happened? The market from there, from its peak, it went up another 20%, but it dropped 70% just a few weeks later. The model was indicating to us, you need to be getting out of this asset because it's going to sell off on you. And sure enough, that's what happened. And then we saw the same thing happen right here in September. We hit this highest risk level in September when the price was trading at around $220 or so. And from there, we went up over the next several weeks. We went up more, but look at how it happened because that's important. We went up to 20% more. Now, we went up 20%, but what happened while the model is telling us you need to be getting out of this asset? The asset eventually sold off 65% from that point. So this doesn't always mean you're at the exact top, but what it is telling you is that you are very likely near the top. So you're risking a lot of money. You're putting a ton of money on the table to get gains like 25%. And mind you, at this point, if you would have sold completely out of Solana and moved into lower risk altcoins during this time, your upside potential would have been massive because Solana went on this huge move. The risk model told you that we're very likely approaching a sell-off. And what happened from there? It sold off or essentially trended sideways for a few months while other assets went up 2x, 3x, 4x, that sort of thing. So this model can be used in this way. It can be used to identify when things are significantly out of line with what may be expected or what the fair market or fundamental value is expected to be. And we saw that same thing in January. So this model is telling us right now, we're sitting in a lower risk zone for Solana. Now, that doesn't mean we can't go lower because if a bear market hit, if a general stock market bear market hit and, NASDAQ, let's say, went down 50%, Solana will likely head down also. But in the long term, it's going to recover is my thesis. And the model tends to agree with that fact. So in the long term, right now is very likely to be an excellent time to be acquiring the asset. Now, personally, when we're in more bearish segments of the market, I purchase less altcoins and more of fundamental positions like Bitcoin and Ethereum, but that's simply for the fact that they have higher market caps. And therefore, they're providing you more downside protection because they're less likely to experience the same types of sell-offs that assets with smaller market caps are. But as Solana continues to grow over time, it's very likely that this asset is going to start to fall into that category. And I do believe that it's going to. I do believe that Solana is going to be the premier competitor to Ethereum going forward into the next market cycle. And that's why, short of Bitcoin and Ethereum, Solana is my next largest position. Okay, so the next thing I want to do is jump over to the Solana USD chart. We're going to look at the volume profile visible range and use that as a framework for developing an idea of where the support and resistance levels are likely to form at. This is going to show us where there have been large quantities of volume traded. And that's going to be important for the fact that when we're moving down, those areas of high volume are very likely going to form support levels. When we're moving up, they're going to form resistance levels. As we've recently seen when we came up to that $140 level back in April, and we got rejected there. That was a well-defined resistance level. So we can use the volume profile visible range to very easily identify those levels and to understand the market that we're heading into for both the upside and the downside. So let's do that. So what we want to look at here is sort of the situation that we're in. We want to understand where the levels of support and resistance are at the moment with relation to where we're sitting. So we're going to do this by taking a look at the volume profile visible range. And if you're unfamiliar with this metric, that's this over here on the right. And what this does is it shows us where large quantities of volume or small quantities of volume have been traded for Solana. Okay, so with that, what we can do then is sort of compare these ranges, because in areas that have traded or have seen large quantities of volume traded, these are naturally going to create levels of support and resistance. So when you're above them, they're going to be levels of support. And when you're below them, they're going to be levels of resistance as you come up to them. So we can see this here. Basically, we're currently right in this zone here. We're currently in this 110 up to around $117, $118 range. And the way that you can tell whether it's likely going to be support or not act as, so the way that you can tell whether it will act as a support or resistance level, or you'll very likely just fly right through that level, is by looking over here. When there's not a lot of volume traded in a zone, the price will very likely just shoot through that area. So for instance, from here at around $117 all the way up to around $135, you can see that there's not a lot of volume. So if we look over here, there's just not a lot of volume there. And what that means is every time we come and get past this resistance zone here, the price just shoots through. Every single time we're right in this range, we just shoot right through. Okay, so here we bounce down and then come right back up. And right above that is a large support level when you're above it. Okay, but when you're coming from below it, you hit it as resistance, as we recently saw. So this run that we went on in April, we came up to hit this and met this level as a strong level of resistance. All right, and that makes sense because in the prior run, so in September all the way through January here, this acted as a level of support. So here we held it as support, here, again here, and then finally for a few more days until we fell through. And so this becomes now a level of resistance as we're coming up to it from below. Now, what you can see essentially is that this area then, this is called a low volume node, by the way, meaning there's not a lot of volume here. So this low volume node is an area that if we get into, if we're able to get above this level right here, around $115, quite frankly, if we can get above that $115 level, then we'll very likely be testing the $135 level yet again. What that means then is we currently need to get through this zone right here, because you can see that there's a fair amount of volume. If you look right in here in this 110 up to 100 and around $118, there's more volume in here. So that means whenever you have more volume, the reason that it acts as support or resistance is because you're statistically more likely to experience more holders in that range. And when you come back to a holder's cost basis, especially if they're holding the asset at a loss, they're statistically more likely to sell. Okay, so we know we'll be coming back into this range where we've been rejected before, as we saw back here in February. And now we'll need to sort of break into this range, because you'll see we're coming from a lower area of volume into a higher area of volume right here, this $110 level, and we'll need to see if we can get through this. Now, if we do get through this, then we're likely going to head up here, up to around 135. And so that's all going to be playing out now over the course of the next few days, because we're right at this more critical level right now. Now you'll notice another level below us. So just like we said, a low volume node. So we're looking right in here in this 103 up to 110. So you could just roughly say 100 to 110. There's not a lot of volume. The price shoots through this level. And so this now has formed a level of decent support below it. Approximately 80, 85, we could just say 85 up to 100, just around. From this level, we've formed a decent area of support now. So we're talking, right in here. You can see there's a lot of volume in here. And that's because ever since January, ever since we broke this level of strong support we had formed at 135, this level has acted as a consistent level of support. Under current market conditions, the results of the market haven't been terrible over these last, few months. But the macro conditions, on the other hand, are favoring negativity. So it's all going to depend on what ends up happening with the macro condition, because we know we're right in this sort of this in-between zone. We're right in between attempting to go up to this 135 level and then start this battle up here where, you can see there's just a mass quantity of volume up here. Okay, so from 135, you're just fighting a battle all the way up to the low 200 because, there was a lot of hype around Solana during this move. So a lot of people were trying to hop into the asset during this time. Whereas if you recall, if you were using the DCA index risk model, this machine learning model, you got out in September. So you were able to avoid all of this nonsense here where we were, going all in. People were going all in to try and capture this 25% move, while a lot of the other assets were making much larger moves at the same time. If the market is able to hold on, then that's the battle that's coming ahead for us. Now, what about if we do run into some trouble in the market? Well, then it's at least good to know what's below us, because we're seeing right now the market is basically just doing whatever the crypto market is doing, whatever tech stocks are doing, basically. So we've seen when tech stocks are doing well, the crypto market is doing well. Conversely, when tech stocks are selling off, we're seeing the crypto market sell off. So if, just to understand what we may be looking at, if tech stocks began to sell off again, and let's just assume for the scenario of talking about what could potentially happen sake, if that were to happen and tech stocks start selling off, Bitcoin started to sell off, well, where might we be looking at as a level of support? And I think there's two potential areas. So the first is we know that the $75 range right in here, so anywhere from $70 to $75, I think will act as a level of psychological support, because we've seen when the market dumped over here in February and, I guess right here in March as well, we were able to hold this level. So this level extends anywhere from around 70 up to around $80. So I think this is one potential level. And depending on how bad the market gets, or hypothetically gets, our next big level of support is you're going to see it form at around $50. So yet another psychological level. So these prices like 50, 75, 100, 200, 300, these tend to form psychological barriers. So I think that ultimately, I think Solana is, definitely one of our better projects, one of the better projects. And I think it's one that a lot of people that are, very conscious of this space and conscious of what the space is being used for in terms of what are the use cases, and not just these people that are, trading meme coins. I think those people tend to be favorable in opinion on Solana. So I think a lot of your more savvy investors would be looking to pick up large quantities of Solana if we started coming down to these levels, because they'll be thinking back to Ethereum in 2019. What happened? We could just look here. Back in 2019, Ethereum, we had times where, we were trading, if we just look here, we were trading down here at the end of 2018 and into 2019. You could have bought Ethereum for just over $100 and as low as $80. So I think Solana investors have that fresh in their mind, and they certainly wouldn't let the potential of a market sell-off prevent them from stepping in and buying in heavily at these levels. Because I think back in 2018 and 2019, a lot of people were still unsure whether this is real. Is this space real? Is it really gaining adoption? But now I think there's more certainty in that regard. So even seeing even seeing a sell-off down to something like 40, 50, I do tend to think that it's probably more unlikely, but there's at least the potential. Depending on how bad the market gets, there's at least the potential. And it's good to at least have in your mind an idea of what is the potential downside, because then you're sort of mentally prepared for it in worst case scenarios. And as an investor, as a serious investor, you always want to have a thesis in place. And the thesis includes both potential upside and what is the worst case downside. Because you want to, you never, if you have a set plan in place like that, you'll never be panicked out of your investment. At the same time, you can be looking to sort of get into the asset or to make additional purchases at some of these other critical levels where we may hit. And, if we're heading down and you're dollar cost averaging, well, then you could be, if you're not doing a routine dollar cost average, you could look to do it at some of these more critical levels that we may potentially go to on the way down. Conversely, if you're dollar cost averaging out of the market, you may look to do them at some of these critical levels on the way up where we're likely to hit resistance. Okay, so that's going to be it for this one, guys. If you guys like this type of content, hit like and subscribe. I'll also be releasing an in-depth look at Solana and the fundamental analysis behind Solana, and using that to develop a very defined metric or model for assessing where Solana may be able to get to in the future. So until next time, as usual, guys, see you.